Good morning and welcome everyone to Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equities may get on to a cautious start ahead of RBI monetary policy meeting outcome. GIFT Nifty indicates a muted start coming in for the Lal Street. Overnight cues, US stocks ended just slightly lower after bouncing off session's low. Caution ahead of Friday's non-farm payrolls report, perhaps the most important weekly report that one would be eyeing, perhaps weighed down on the sentiment. Street expects US employers to have slowed hiring in September. Another slice of data in US too weighed on the sentiment. Weekly initial jobless claims came in at 207,000, up by as much as just 2,000. Now, slight increase in jobless claims in line with Street, but disappoints most of the investor community, hoping the weekly data would start to signal a labor market breakdown and end the run in rates that is hurting stocks. Let's talk about Asian pairs. Broadly flat before a monthly US payrolls report. Essentially, let's talk about FII and the DII trend. How is that shaping up? FII continue to be sellers. Offloaded shares worth around 1,864 crore, and DIIs, on the other hand, continue to buy. They've purchased equities to an extent of 521 odd crore. The NSE has added in Punjab National Bank to its F&O ban list for October 6th. It's retained in India Bull Housing Finance, Delta Corp and Manappuram Finance to the ban list. Now, let's also discuss the trade setup strategies for the day, along with few stock recommendations from Nirav Chheda, AVP Derivatives and Technical Research at Nirmal Bang. Morning there.
Yeah. Good morning, Nickey.
What's the strategy for the day? It is an important day, RBI monetary policy strategy ahead of the outcome for Nifty as well as Bank Nifty.
Yeah. So, if you would have told me this, what is the outlook about 2-3 months back, I would have definitely told you, it was a trending market. But at this point of time, we just take out 3 weeks of September. Last 3-4 months, Nifty has been lackluster, even Bank Nifty. We are not seeing a real trend.
We're just going to come back to you in just a bit. A bit of sound check issue, but we're going to get back to you. Let's address in the RBI monetary policy expectation. It is likely to hold on the repo rates at 6.5% and maintain a withdrawal of accommodation stance in the upcoming October monetary policy. That's Moneycontrol poll of at least 10 economists, bankers and fund managers has shown. Since the April monetary policy, the RBI has kept repo rate unchanged at 6.5% after raising rates by 250 basis points since May 2022. This was after inflation showed in signs of moderating. That's the word coming in by apparently in terms of the expectation that we have. But we're going to be talking about stocks and news. Couple of things. The MPC is likely going to be holding in rates at 6.5%. It's likely going to be maintaining in that withdrawal stance. Perhaps any expectations apart from that, or any stance apart from that, may weigh down well or not go down well on equity. Remains to be seen essentially how the undertone works for the market. But stocks that you need to keep on your list early this morning. First, Valiant Laboratories, new kid on the block. The pharma company is set to debut on the exchanges on October 6th. The issue price has been fixed to an extent of 140 per share. The IPO has received in a decent subscription, and now analysts believe that the stock may open somewhere in the range of 161 to 168 per share as compared to 140 issue price, owing to the pharmaceutical, perhaps the paracetamol manufacturers' improved financial performance and expansion plans. That's the word when we have in terms of stocks and news. But important development that you need to keep on your list. PB Fintech, where Softbank plans to sell in part stake in PB Fintech in fresh block deal of around $105 million. That's the word. And it is an important stock that you need to keep on your list. It is a Moneycontrol exclusive that we've got for you. Softbank plans to offload an additional 2.5% equity in PB Fintech. The offer price is expected to be in the range of 752 to 767 per share. Represents a discount, perhaps flattish as compared to what the previous closing price would. But also do bear in mind the fact in December 2022, the Japanese investor sold in as much as 5% equity in PB Fintech. But let's go across to Nirav and check with him. What does he make out of Nifty and Bank Nifty before we address in Bajaj Finance?
Yeah, Nickey, sorry, there was a technical issue.
No worries.
Yeah. So, in terms of Nifty and Bank Nifty, with the RBI policy today, they are lackluster actually. Very importantly, you take out 3 weeks of September where Nifty moved up about 1,000 points. Other than that, in the last 3 odd months, Nifty's remained flat or lackluster. So no real movement as such in Nifty is expected. Importantly, Nifty is below the 50-day moving average, which is around 19,600 levels, which is a very important resistance now. That was the support which has been broken. So that becomes a resistance. Once we go up above that 19,600 levels, only then you'd probably witness some buying action coming in, and then Nifty going up towards 19,800, 19,900. No major movement actually, no 500, 700 point movement is expected at this point of time. So how do you play this RBI policy game? I definitely believe, doing a strategy, straddle, a long straddle of the next weekly expiry, which is 12th October. That should be bought. The 19,550 call and put, you should buy both together in the same category, same quantity. Also, very importantly, the premiums come to around 190, 195 odd points. So any move, 150, 200 point move, either direction in the next couple of days, your strategy comes into profit and you stand to gain. So that can be done. You can keep a stop loss of around 140 of total premium, and your target should be around 300. So when that premium becomes 300 odd points, which is right now at 190, that is your target. So that is how you should be trading at this point of time. In terms of Bank Nifty, 44,000 is a very important support level. If that gets broken, you might see further selling coming in. However, we are seeing some shorts being covered in the private sector banks, which is a good sign, especially HDFC, Kotak and Axis. And even ICICI. So, they might, hold the Bank Nifty together, and the next real upside movement comes around the 44,800 odd levels, which is the 50-day moving average. Once that is broken above, you might see, a big move on the upside for Bank Nifty. Until then, it should remain within this range of about 44,000 to 44,800.
All right, that's the word coming in. Perhaps I also wanted to address in Bajaj Finance, which is going to be raising in 10,000 crore via QIP preferential issue. 8,000 crore will be coming in from QIP, and another 1,200 crore will be coming in from preferential allotment issue. And it's going to be preferential, perhaps the issue is going to be coming into promoter, Bajaj Finserv. That's the word coming in for Bajaj Finance. But we're going to be addressing in the market open at this point of time. We were anticipating a cautious start, but brushing that aside, the sentiment right now is positive. We are looking at a positive start coming in for Indian equity markets, 19,600 mark, way above that level. Holding on to that level remains to be seen if either side of the direction could be taken in by the markets. Let's also talk about Bank Nifty. How is that faring up for you? Just to see the momentum ahead of the crucial RBI meet, where another pause perhaps is expected. 0.2% of gains coming in for Bank Nifty index, stacking up well for you, and is perhaps not gains to an extent of perhaps Nifty, but is holding up well in early deals. Let's also talk about mid cap and the small cap performers, just to see if there is an outperformance perhaps coming in from the broader counterparts. Yes, we're looking at 0.4% of gains coming in from the mid cap index, and small cap index is acting no different. We're looking at gains to an extent of 0.5% from small cap, a bit of outperformance coming through from that basket yet again. Let's also talk about what we have in terms of sectoral indices. IT is shining bright ahead of the earnings season next week, which will kickstart essentially next week. A bit of chatters around the TCS buyback and the earnings that will come through, but that remains to be seen how the stock is holding up. Pharma, 0.6% of gains coming in from the pharma index. And also, let's talk about the other sectoral indices that we have. FMCG is doing well. Perhaps all the defensive names have been doing well in early deals. And also, in terms of metal basket, that is holding up for you and is trading with gains roughly to closer to 1% in early deals. Let's also talk about realty, PSU bank index and auto. Essentially, all the rate sensitives put together. Auto is doing well, 0.5% of gains coming in by the auto basket at this point of time is already clocked in terms of realty. Well, we are looking at some amount of gains even from that basket in terms of what we have for PSU banks, which have been acting in differently as compared to the private sector banks. Well, there is a divergence of trade, just a trend. Look at the screen. It is flat with a bit of positive bias from the PSU bank right now. It is a flat start. Let's also look at the top gainers and the top losers that we have on the screen. Bajaj Auto, BPCL and Hindalco. These are some of the top gainers that we have for you. Apart from that, JSW Steel, Tata Motors and Titan. These are some of the other gainers that we have for you. In terms of the top losers, let's actually understand where the momentum is right now, not favoring a couple of stocks there. HUL, Nestle India and Bharti Airtel. These are some of the top losers that we have on the screen. L&T and Kotak Mahindra Bank along with Britannia also make it to the list. But that's that when it comes to the market open. We're going to quickly go back perhaps now to Nirav and check with him what does he make out of essentially something like, names like IT, TCS for that matter, how the chart's holding up.
Yeah.
Nirav?
Yeah. So, Nickey, I don't know, a lot of people are negative on this sector, probably fundamentally, but technically and, open interest wise speaking, for this expiry, IT has covered its shorts. So, all in all, I believe IT as a whole should move up and it should move up very significantly. So, something like a TCS or an Infosys or, even the others, the Tech Mahindras or the HCL Techs of the world, they can actually move up significantly in the next couple of trading sessions, probably through the expiry, because they are light on open interest, shorts are out of the system, and they can probably now witness long creation. So TCS can move up towards that 3,800 odd levels. A very important breakout has been given about the 3,500 levels, which had always been a resistance area in the last couple of years, and now it has moved up above the same. It can move up towards that 3,800 odd levels, so look to buy this stock at current levels. 35.20, 35.30 are good support areas now. That should be the stop loss. Even Infosys for that matter looks very good. I believe at current levels of around 1470 odd, this is one stock that one should be buying, because this stock has in it to move up towards that 1550 odd level. So look to buy the stock at current levels. 1440 should be your stop loss.
Right, that's the word coming in perhaps on IT stocks. But let's actually navigate our discussion to Amrish Baliga, who's the market expert, perhaps chatting in about the fundamental side of the story. We're going to be talking about it in just a bit, but it is a crucial day for us. Essentially, it is a Friday special opening bell segment, and we are going to be talking much about crude oil prices along with slew of macro and RBI monetary policy, essentially, which is perhaps going to be dictating in the trend for Indian equity markets. Oil in has edged up, but a bit of profit booking apparently has crept in for the past couple of days. It's swayed in easily from that $100 mark to now somewhere around that 85, sub 90 level. So that remains to be seen. That's the word coming in perhaps for crude oil. It remains to be seen. We've been joined by an important guest today, and we have Peter McGuire, CEO, Exim Australia, who's going to be joining us in just a bit from now on. But that's that in terms of what we have for equity markets and the shadow that we have for crude oil prices, along with that of commodity baskets and RBI monetary. These are some of the important cues that we're going to be talking about. Well, volatility and talk about it, you have to be talking about crude oil, but we're going to go back to Nirav and check with him what does he actually make out of something like Bajaj Finance right now.
Yeah. So, in Bajaj Finance, a 2-yearly consolidation is over. A downward sloping trend line has been broken above, and that breakout has come in around that 7,300 levels. It went up first and then retested those levels. It is now again moved up. I believe this stock is now headed towards that 84 or 8,500 band, and it can move up from here quite significantly, quite aggressively. So look to buy the stock at current levels. You can keep a stop loss of around 77.50 from a medium term or a short term perspective.
All right, also let's talk about something like a Suzlon and Vedanta perhaps has been doing well in trade today. What do you make out of that, and what's your early assessment? Also, OMCs, given crude oil prices have witnessed some amount of slide that has come through. Anything that you like from that basket?
Yeah, see, Suzlon, after a long time, after so many years, the final chart here is very positive. Importantly, the volumes are very, very good in this stock, which have not been witnessed earlier. So something is different here right now. Again, it has witnessed a very important breakout above that 18 and a half odd levels, which was a very, very important resistance for this particular stock. So, about a 10-year breakout has come in, and then it has moved up above the 18 and a half odd level. So, very likely this stock is headed higher. It can, move up towards that 50, 55 band in the medium term. Look to hold this stock. This stock is now probably just going to go up. Any dips should be bought into 25 to 26 band, which is a very good support area now. So, if it comes there, look to buy this stock. Then now coming back to the OMCs, I believe OMCs are ready for an up move. Most of the consolidation has been done in HPCL, BPCL, IOC, and I really like BPCL at this point of time. Even though it has come down, from the start of the day, but at 340, 345 odd levels. It looks very good. Don't see much downside at current levels. Very importantly, again, shorts are out of the system, which is very important. They are light on open interest now, and they can probably witness good buying action going forward. They might remain volatile for the next couple of trading sessions, but overall, don't see much downside. So you can buy this stock at current levels with a BPCL with a stop loss of around 335 odd, and 375, 380 is what I'm looking at this point of time. Similar is the case for HPCL, where I believe 275 to 80 can come in. You can buy with 245 as a stop loss. For IOC, the chart is still a little negative at this point of time. I would like to avoid this at this point.
All right, Nirav, thank you so much for taking out the time and speaking to us. Indeed, it's great having a chat with you early this morning.
Thank you.
All right, let's now actually talk much about oil market crude prices. Along with that, commodity prices, essentially. Oil prices have declined by as much as 2% after a 6% sharp decline that we've seen in the previous session. Clearly, a bit of volatility which has been weighing on the crude prices overall. In terms of what bearing it has on Indian equity markets, there is a direct correlation that we have for crude oil as compared to that of equity markets, positive correlation. But to join us and take the discussion forward about crude oil, commodities, global cues, we have Peter McGuire, who is the CEO of XM Australia, joining us early in the morning from the studios. Morning, and thank you so much for taking out the time to speak to us.
Well, lovely to be here, Nickey.
All right, I'm going to start off by asking your assessment. There's a bit of drop coming in, a bit of volatility creeping in the crude oil markets. 2% drop after 6% sharp losses that we've seen. Clearly, the levels have been taken off.
Sure.
Your assessment, demand situation and the levels that one could work with.
Well, I think over the last week has been electric. We've seen that big washout about 12% down. So really that took the market by surprise. The first part is I think it was exhausted to the upside. It was parabolic over the last 100 days of trading. And that really gets to a point that markets get ahead of themselves. And we've seen that pull back now to that $83, $84 level. There's probably a couple of more dollars there to wash out, and then I think it'll stabilise. So the markets are certainly dynamic and very volatile.
Sure, that's clearly the one thing that we've seen across, right, in terms of the higher interest rate also that we've been talking about. Enough and more has been spoken about it. What's the bearing essentially? How do you see US Fed Reserve kind of holding back on the interest rates higher for longer? What kind of bearing it will have on the markets? How are you looking at it in terms of commodities, in terms of crude oil, in terms of dollar? What's your perspective?
Well, I think first off, if we look at the US dollar index, it's now nearly at 106.50. It was at 107.30 over the last couple of days. This week has been very dynamic. I think that there's probably more upside for that US dollar index, maybe up to 108, 109, and then we'll revalue where we are. As far as interest rate policy from the Fed, they're all saying that probably November there could be another rate rise. So people are saying, this is where the analysts are talking, there's every opportunity there for the Fed to actually hit the go button. As far as pullbacks in 24, we've just got to see how the first quarter moves, if we're going to see any pullback from the Fed as far as reducing rates. So I think the next couple of months are going to be very dynamic, and those high energy prices are certainly a factor for consideration.
And within the commodity space, what do you like in terms of base metals, in terms of coal? What are you looking at? What's your top bet? your assessment?
Well, over the last couple of months, it's certainly been crude oil. It's been one-way traffic. Base metals have been languishing, and they're back to that, if you're looking at copper, that 8,200 a metric tonne. So it's been very soft. If I look at the gold perspective, it's been incredible washout, and we've seen a very big correction to the downside along with silver. So I think its best days are ahead of it over the rest of this year. So more upside for gold, and just to keep an eye very closely on the US dollar index and what's happening with earnings as far as US equities coming forward.
All right, let's also chat about the US 10-year Treasury yields right
Sure.
now, which are near around that 16-year high level. The real question that I really want to ask here is, how long can the rise, yields can rise further? And if so, at what point of time do you think higher yields will inflict some amount of serious damage on the economy?
Well, we've got to be conscious as far as where we are with equity markets. If you look at the Nasdaq, it's been incredible over the first 8 months, and we've seen a washout or a little bit of softening in September, and that's probably been followed through in October. The Dow's performed fairly. It wasn't a bad first 6 or 8 months, but it's given back all of those gains. So I think you've got to be very conscious as far as equities over the next couple of months, if we see growth in what particular sectors. As far as interest rate policies of impacting that, high yields, as you mentioned with the 10-year, there's easy money to be earned by taking money out of the market and sitting on the sidelines earning interest. So this is where the risk perspective needs to be considered, and that's where traders have got their mind eye on what are the opportunities leading forward over the next couple of months.
All right, a very broad-based question there for you, perhaps in terms of the themes that you're looking at, be it in terms of commodities, be it in terms of dollar, be it in terms of perhaps commodity basket. Along with that, what you're really looking at, what seems to be more favourable at this given point of time?
Well, you can't take your eye off that US dollar index and high interest rates. So that seems to be a big attraction, and the energy stocks, because they've had such a big build over the last couple of months. So keep an eye on the US dollar, what's happening as far as against currencies, the euro, certainly the yen and the pound. They're being crushed at the moment, and there's every opportunity that I think further uptick for US dollar. So if that happens, what's going to happen as far as other currencies, and what impact is that going to have to, I think, the global interest rate perspective?
That's that in terms of what I had to ask in terms of the commodities, in terms of global cues. But since your final word coming in on the interest rate scenario, perhaps, how do you view that and the bearing that it will have for the global markets? How are you looking at the entire situation?
Well, I'm keeping a very close eye, like all traders are, where we are as far as Fed policy and other central banks moving. You guys have got an interest rate decision in the next hour, but I don't think you're going to see any movement. So, or the next, as far as India is concerned, the next part, of course, is what happens with policy going forward into 24. And if we are to see a further hike or more consideration as far as rate policy moving up, then that's really going to be a dampener, I think, for equities. So we've got to be very mindful of where interest rates and their impact as far as from an inflation standpoint, and where traders are looking for opportunity. And that's going to be the exciting point over the next 3 to 6 months.
All right, Peter, we're just going to leave it at that. And thank you for taking out the time and joining us in the studios this morning.
Thank you, Nickey.
All right, with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.